What is money? It's something we use every day, but do we truly understand how it works? Let's start from the beginning. Before money existed, people used bartering to trade goods and services. Bartering worked, but it had limitations. What if you had wheat but needed shoes, and the shoemaker didn't need wheat? To solve this, societies created money, something everyone would accept. Early forms included salt, shells, and metal objects. Then came coins. The Libyans, in modern-day Turkey, minted the first official coins around 600 BC. Coins had intrinsic value and were easier to trade. They revolutionized economies by standardizing value, but metal was heavy and hard to carry in large amounts. So in 7th century China, paper money was born. Paper money wasn't valuable itself, but it was backed by trust. People believed in its value, and that belief made it powerful. That's the essence of modern money: belief. It only works because we all agree it does. Today, most money is digital, just numbers in computers. But where do those numbers come from? Central banks, like the Federal Reserve or the ECB, manage money supply. They print physical currency and control interest rates. But here's the surprising part. Most money isn't printed. It's created when commercial banks give out loans. Let's say you borrow $10,000. The bank doesn't hand you someone else's money. It creates new money digitally. This is called fractional reserve banking. Banks only keep a fraction of deposits and lend out the rest. Each loan becomes a new deposit, which can be loaned out again. This cycle massively increases the total money in the system. Over 90% of the world's money is created this way, not printed, but loaned into existence. It's money made from debt. But money itself has no real value. It's paper, metal, or pixels we give it meaning. That meaning is backed by governments, economies, and trust. Lose that trust, and money becomes worthless. Now, let's talk inflation. It happens when too much money chases too few goods, so prices rise. Central banks fight inflation by raising interest rates. This makes borrowing expensive and slows down spending. When inflation is low or the economy is weak, they lower rates. That encourages spending and stimulates growth. But too much manipulation can be dangerous. Zimbabwe and Venezuela saw hyperinflation from overprinting money. Prices doubled in days. People needed wheelbarrows of cash just to buy groceries. The opposite is deflation, when prices drop. It sounds good, but it can kill spending and stall the economy. Money comes in many forms. Fiat currencies, like dollars or euros, are backed by governments, not gold. Then there's commodity money, like gold or silver. And today, we have cryptocurrencies like Bitcoin. Bitcoin is digital, decentralized, and limited in supply. Only 21 million will ever exist, making it deflationary. It runs on blockchain, a transparent and secure system. But its value swings wildly with news and speculation. Still, it's redefining what money can be. No banks, no borders, just code and belief. So what does money actually do? It serves three purposes: medium of exchange, store of value, and unit of account. Without money, economies would collapse. It powers trade, innovation, and everything in between. It also shapes behavior. We work for it, save it, chase it, and sometimes fear it. Psychology plays a big role. $100 as a gift feels different than a $100 discount. Ever noticed prices ending in 99? It's psychological pricing. It feels cheaper than a round number. Money also drives inequality. The rich get richer because money makes more money. It's called compound interest. $100 growing at 10% becomes $110 and $121 and so on. That's how wealth snowballs. Invest early and your money works while you sleep. But money is not the same as wealth. Wealth is time, freedom, and opportunity. Money is just the tool. In 2020, during the pandemic, Governments printed trillions. Markets surged even as people lost jobs and businesses. That showed us how disconnected money can be from real life, and how quickly it can be created or destroyed. Now, we're entering the cashless era. Mobile payments, digital wallets, and QR codes are everywhere. In China, even street vendors use apps instead of cash. And governments are now developing CBDCs digital versions of national currency. These could replace physical money entirely. They offer control, speed, but raise concerns about privacy. So what's the future of money? More digital, more global, and maybe more decentralized. But one thing remains the same. Money works only because we believe in it. It's not about paper or coins. It's about trust in a shared system. To master money, we must understand it. Because once you do, you're not just earning it, you're controlling it. And that's the real power. Not just making money, but knowing how money works.